Hello, I'm Mynette with Secure Capital Investment Group, and we're here in beautiful Miraflores, Peru. And I'd like to introduce Tim Boykin. He's the CFO of Secure Capital Investment Group.
Hello.
And this is our special guest today, David Kerner with Eurasia Group out of New York. And Daniel, to start with, why don't you tell us a little bit about yourself and your company?
Sure. We are one of the leading political risk consultancies. We follow politics and political dynamics and how that affects investment climate, economic policy, and stability. And I particularly focus on Latin America, and specifically follow Peru and the south of Cone.
Okay. In your opinion, Daniel, what do you see as the three primary influences on the business, kind of the business political climate in Peru over the next 3 to 5 years?
Well, I would say that there's very little chance that there would be any changes really in economic policy. I would say market-friendly, investor-friendly policies seem to be in very solid footing. There seems to be a wide agreement, at least among the political elite, on that. On the other hand, obviously now the global environment has changed, but we certainly benefited from growth in the past 5 years, from very high commodities, especially mineral prices, and high growth internationally. Obviously the economy is going to be somehow affected, but to a great extent because the economy has been very well managed in the past 5 years or so. Peru is very well prepared, is much better prepared than most other Latin American countries to weather the global financial crisis and actually to mitigate the effect, which implies that most of the projections are that growth, even though it's going to slow down, it's probably not going to slow down that significantly. It's going to continue to grow. And I would say that the third one is that politics do remain somehow an issue in the sense that there is poverty still somehow high, even though it has gone down, and there does seem to be still a widespread sense of rejection of the political class, which means that election cycles tend to be a bit complicated. But I think there are important mitigating factors, which means that the risks going forward are probably not that high.
Okay, and that kind of leads into my next question. What would you say to a U.S. investor considering Peru as far as risk tolerance?
Well, I would say that obviously, Peru is an emerging market. Risk in that sense is a bit higher than in the U.S., although that's not true the case maybe anymore.
I don't know about right now. We think different. We do think right now.
But certainly what's important, I think, is to understand that there are differences between emerging markets, and that at least in Latin America, a country like Peru that has been very well managed, that has authorities that have a very clear sense of how to manage an economy, and that have really taking all the precautions to take advantage of a growth cycle and be prepared for a situation that's less favorable, implies that the risks in Peru are much lower than in other Latin American countries, and that it's important to know and to learn to differentiate among emerging markets.
Do you think Peru is the top Latin American country right now, or what do you think are the top three to invest in?
I would say that you have Chile, which certainly has a long history of being very stable, with very strong institutions and very investor-friendly policies. Then I would say that Peru is probably second to that. And after that, of course, I would put maybe Brazil and Mexico.
Okay.